markets are nosediving on this Thursday morning, tracking global markets deep into the red. On Wednesday, Trump declared a national economic emergency and announced a minimum 10% tariffs on all countries starting on April 5th, and over 180 countries and territories will face these reciprocal tariffs under his new trade policy. Now, higher rates for 60 countries deemed the worst offenders will also go into effect. Countries that are deemed bad actors will face higher rates, such as 24% on Japan, 20% on the EU, effective April 9th, while China will face a new 34% tariff, bringing the total to 54%. Canada and Mexico are exempt from the reciprocal tariffs, but still face 25% tariffs due to fentanyl as well as migration issues. Not surprisingly, gold bonds rallying in reaction as equity markets bleed into negative territory. Joining me on this Thursday morning to weigh in from Miami is Gabriela Berrospi, founder of Latino Wall Street. Gabby, thank you so much for joining me. So last week we were talking about tariff uncertainty, and now we have more clarity in terms of tariffs, but also a lot of uncertainty. So what was your take on the tariff announcement yesterday?
Well, I think it's very interesting the metaphor that Trump said, right? So his metaphor was the operation's done, the patient survived, and the patient will be stronger. So I think that's what we're trying to do. You know, everyone who has accomplished anything big financially with it, and anything really knows that sometimes you have to make a sacrifice, right? There has to be like those difficult decisions that you need to take in order to have better result down the line. So I think that's exactly what's happening. The stock market is, of course, we're seeing a dip, but it's not as bad as you would have thought, right? Like we had a lot of uncertainty, and of course, a lot of people were expecting even worse results, but it's not so bad. And I think right now the key point is going to be how our country is going to respond. There's already multiple countries that are saying, this is unacceptable. We're going to fight back. So we're going to have to wait how that unfolds, because what the administration is saying is that if someone fights back with a reciprocal tariff, then they're going to also fight back. So then we're going to see reciprocal tariffs, unreciprocal tariffs, unreciprocal tariffs. And that's the definition of a trade war, right? So I think what happens next will depend on all these countries, and if we see any negotiations on the table, or if it's just going to be a crazy war.
And Gabby, as you mentioned, on this Thursday morning, we're looking at the Dow, NASDAQ, S&P 500 down, all at least 3% so far. But for Main Street, when we think about the American consumer and spending that makes up about 2/3 of GDP in the U.S. economy, we know that we've been hearing from companies cutting back on their guidance as well as outlook. And in just a few short days, we'll kick off earnings season as well. So how do you think tariffs will affect Americans out there as well as businesses, not to mention their investments and their retirement accounts?
Yeah, so let's start with consumers, right? So prices can go up for sure with tariffs. That's something that, in fact, um, part of the reason why we started with tariffs was to incentivize American products, right? But then if the demand goes down, then that can affect also American products. And a lot of American products have different parts that are made abroad. So that can just affect the whole market in general. So how the consumer will be affected is basically higher prices. And again, this is something that we're doing in order to get better jobs, get better opportunities, and improve the country, right? We're not trying to destroy it, we're trying to improve it. So it's hard for most people to see that this is a stage that we have to go through, because the path we were going on was not sustainable. And for the investor, yes, of course, if you're investing in the S&P 500, of course, you're going to see your account go down. And most people in retirement accounts invest in the S&P 500. So that can be scary. If anyone was around in 2008, that was very scary when the market dropped so much to see that, right? Some accounts were cut in half. But the trick here is to also be in those investments that are benefiting from this market crash, if you will, right? So gold, for example, has stayed extremely strong throughout this whole stage, and the projections is that we will remain even stronger because as uncertainty increases and volatility goes up, then investors will be looking for that safe haven, that inflation hedge, that goal, right? That kind of solves that inflation problem that most people are afraid about. So I think it's also looking at it in from a perspective of, okay, if everything's going down or most things are going down in the stock market, where's the opportunity here? Because there's always something that goes up.
Okay, Gabby, well, we will have to leave it there, but thank you so much for joining us the day after the tariff announcement. And as always, thank you so much for sharing your perspective.
Thank you.